Futures and forex trading contains substantial risk and is not suitable for all investors. Past performance is not necessarily indicative of future results. This content is not trading advice and should be used for educational purposes only. Please take a moment to review the full disclaimer. Hello, I'm Kevin from chartspots.com, and today we're diving into a simple but highly effective trading strategy. Before we dive into the strategy, it's crucial to understand a key component, the volume profile. This isn't just background information, it's an essential part of the strategy itself. So, what is a volume profile? Think of it as a tool that shows us where trading activity is concentrated at different price levels on the chart. Instead of focusing only on price and time, it reveals the volume or amount traded at each price level over a given period. This gives us insights into zones where significant buying and selling have occurred, highlighting levels that the market considers important and where price is likely to react. Now, what's the VPOC or the volume point of control? The VPOC is simply the price level within a session where the most volume was traded. It represents the highest interest zone where buyers and sellers really engaged. If we look at the chart here, it's represented by the red line. And what is a naked VPOC? When a session ends and that VPOC hasn't been retested by price in future sessions, so in this case the regular trading hours, it's called a naked VPOC. These levels can act as powerful magnets for price, providing us with key support and resistance levels. So if we're looking on the chart here, the naked one starts where the session ends, and it's represented by the dashed line. So let's talk about the strategy. The trigger for this trade strategy is an exact test of a naked VPOC. To see these levels, you need a session volume profile indicator that supports naked VPOC levels. I'm using the ChartSpot session volume profile indicator here, which you can try out for yourself with a fully functional trial period. So let's have a quick look on how it's been set up. So I have the session volume profile added here, and the key things to look at is we've of course enabled the VPOC, we've enabled the value area, we display the naked VPOC, which is the key level we want to use here, and another important setting is the trading hours, which in this case is the index futures regular trading hours session. This means that the profiles that are being drawn are only for the regular trading hours sessions. And for this strategy, we're watching for moments when price in a following session hits a naked VPOC line and uses it as an exact support or resistance level. In the example we see on the screen, you can see right here that the price bounces right off that naked VPOC. In fact, the low of that candle is exactly the same value. This bounce usually signals that short-term traders are taking advantage of this level, but they likely won't hold their position for very long. And that's in fact our opportunity. We're looking to fade these exact bounces. Next, let's talk about the entry and exit. To enter, we want to watch for the point where this bounce starts to lose momentum. A helpful tool for this is to use the Anchored VWAP, which I'll also link in the description. Anchoring it from the bounce lets us track the volume weighted average price. So let's have a look what that looks like. So we're taking the drawing tool, VWAP anchored, and we're placing it, or we're letting it start rather, just where the bounce has happened. And then you can see it starts to draw a VWAP that starts calculating at that particular point. Now what you could do is when the price drops below a certain point of this VWAP, for example here, you could decide to take a short position. And an alternative that you could do is you could start scaling into this position as price in fact moves away from this line. So for example around here and around here as the distance increases between this line, because we're expecting it to return where it came from. For your exit, a straightforward target is to look for return to the naked VPOC level where the bounce started, or in fact slightly below it. So in the example here, we're looking to retest this area, and that would be our exit point. And another way that you could look at it is to use the Anchored VWAP again. And in this case, you would move it to the intermediate high after the entry and exit as momentum begins to shift, scaling out along the way. Of course, always define your risk upfront and set your stop losses in advance. So how often does this setup occur? Looking at the ES futures over the past month, we see around 6 instances of exact bounces from naked VPOCs. So while it's not daily, it's frequent enough to be part of your toolkit. You can download and test the indicators I've mentioned, links are below. Stay tuned for more videos where we dive into trading strategies, explore indicators, and discuss everything from statistics to the mental side of trading. Thanks for watching, and I'll see you in the next one.